The most common comment that I get on any video that I put out on any platform that I'm active on is, we need to go back to pre-pandemic prices. And they're actually right, I guess, or could be right, but I believe that they're right for the wrong reasons. I'm that Agent Kelly, and if you guys enjoy Canadian real estate content, make sure you subscribe to the channel to see more of it. And if you want to chat about buying or selling in my local area, which is Abbotsford, BC, and the Fraser Valley, you can book a call with me using the first link in my description. Okay, so what do we need to go back to pre-pandemic pricing? Now, first off, I don't think we need or have to do anything. I think the market is going to do exactly what it wants to do, irregardless of whatever you want it to do. And secondly, let's bring you guys back to the 90s. Now, I didn't actually find this. A buddy of mine named AJ Marini did, so shout out to him. But basically, back in the 90s, on a national basis, we saw home prices slowly climb for about a decade. It was choppy, it was almost completely flat, but in the end, there was some growth in prices here. And this is a chart of prices, just so we're clear. Prices. Now I'm going to show you guys real property prices, which is essentially the valuation of real estate, because there's prices and there's valuation. This is the valuation of Canadian real estate in the 90s. Because when you look at the, price of a stock, that's not the valuation. You know what I mean? Like, when you want to know the value of a stock in relation to its price, there are several different indicators you have to look at. Well, despite the prices staying flat in the 90s and going up slightly during this time, the actual valuation tanked substantially. So how does that happen? Well, basically during 1988, 89, and 1990, the value of the US dollar was dropping in comparison to Canada's dollar, meaning an American could afford to buy less real estate in Canada because our real estate trades in Canadian dollars. And vice versa, when the value of our dollar goes up, so does the valuation of our real estate. Now, the price could stay the same or flat, while the valuation increases because of the strength in the dollar. Well, you'll notice after 1989, real property values in Canada started tanking and got progressively worse throughout the decade. This was because the American dollar was growing in strength in comparison to the Canadian dollar. Now, I'm not going to dive too deep into this topic here, but I just want to show you guys that price isn't the only metric that matters when we're talking about the valuation of an asset. When we say such and such asset is in a bubble, what we're essentially saying is that the price has become so severely detached from the actual intrinsic valuation of that asset, and therefore when the bubble pops, you'll see the price come back in line with its actual valuation, or sometimes even dip below it. And the easiest way to just explain this to you guys is like, prices can go up while the valuation is actually going down, which is exactly what happened in the 90s. Now, today we are at 215 on this index. This is the prices index, not the valuations. And to get back to pre-pandemic prices, we need to fall to 180, which is like a 15% drop in prices. However, if you go look at the valuation chart here, not only are we pretty much already at pre-pandemic levels, we are trading just a couple points above where we were in 2017. Now, if we want prices to fall another 15% from where we're at right now, we're going to be trading at early 2016 valuations. Now, I'm not saying that this can't happen or this won't happen. I'm just trying to show you guys, for the people out there calling for pre-pandemic prices, on a valuation basis, we're already there. And the reason why I think it's somewhat unlikely that we're going to see prices come down 15% to that pre-pandemic level is it's kind of like saying Apple stock should go back down to 2019 prices. Well, Apple stock is a better company since 2019. They make more money. There's more money that has been injected in the system since 2019. There's more people using their product. So if the price were to go back down to pre-pandemic levels, it would be severely undervalued now at this point. Like the price at 2019 and if we were at that same price today, they would be at substantially different valuations. Just like if, Canadian real estate were to go back to 2019 prices, well, There is substantially less supply available in comparison to the amount of people that live here. There's way more people that live here now. There's way more money floating around in the monetary system. And the cost to replace housing is like 50% higher than what it was in 2019. And again, I'm not saying prices can't go down that far, again, because prices do sometimes drop below valuations, and then you're in an undervalued situation. Happens quite often in assets, but I'm just saying that if that were to be the case, we would then probably be in an undervalued situation. And I'm just kind of giving you the rationale for why that is probably unlikely. So if you enjoyed this video, don't forget to subscribe to the channel, like the video. I'm that Agent Kelly, and I'm making moves to move you. Peace.